Good morning and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Tuesday, April 28th, 2026, and we're seeing some significant cross-currents in the markets today, with geopolitical tensions pushing oil prices higher while technology faces pressure. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. Well, the dominant story continues to be the Iran war impact rippling through global markets. We're seeing oil contracts top $110 a barrel after reports emerge that Trump is unhappy with Iran's proposals to end the conflict. This is creating a cascade effect across sectors. BP just reported profits more than doubling from what they're calling a war-related windfall, while companies like Maruti are missing profit estimates, as costs rise directly from the Iran war impact. The Bank of Japan even raised their inflation forecast, citing war turmoil, and they're holding rates steady for now. What's particularly notable is how this geopolitical risk is creating divergent pressures. Energy companies are seeing windfalls, while consumer-facing businesses and manufacturers are getting squeezed by rising input costs. We're also seeing Germany's Merz stating that the US is being humiliated by Iran, which signals growing impatience in Europe. This isn't just about oil prices anymore, it's about broader supply chain disruptions and inflation concerns that were supposed to be behind us.
That's a significant development with wide-ranging implications. On the technology front, we're seeing mixed signals. What's your read on the big tech situation?
The tech sector is showing real strain despite massive AI spending. We've got AI investments set to hit $600 billion, but investors are starting to question the payoff. Timeline SoftBank shares took a dive, and US tech stocks are under pressure, following reports that OpenAI is missing its goals. That's creating doubt about whether these enormous capital expenditures will translate into profits anytime soon, however. And this is important. We're also seeing stocks inch to new records, with Nvidia strength helping to overcome broader consumer weakness. So there's this tug of war happening where AI infrastructure plays like Nvidia are performing well, but the broader tech ecosystem is facing skepticism. The Cerebra's IPO is coming, which will be a test for secondary market valuations and could tell us a lot about investor appetite for AI companies at current valuations. Novartis CEO is also warning that the reality of Trump's drug pricing policy will set in over the next 18 months, which adds another layer of regulatory uncertainty for healthcare tech.
And we're seeing some interesting corporate activity with SpaceX. How should traders interpret this?
The SpaceX situation is fascinating from a market structure perspective. We're seeing funds rushing to attract retail investors before a potential IPO, which tells us institutional players believe there's significant retail demand they want to capture early. Bill Ackman is also testing whether social media fame can power public offerings with dual Pershing Square listings, which is essentially a referendum on whether influencer-style marketing works for sophisticated financial products. SpaceX itself is tying Musk's compensation to Mars colonization goals, which is an unusual structure that could set precedents for how visionary companies structure executive pay. For traders, this represents a shift in how IPO access is being democratized, but it also raises questions about valuation discipline when retail enthusiasm is high. The key is whether these companies can deliver on ambitious promises or if we're seeing late-cycle exuberance.
What does all this mean for the major indices? Where are we technically?
Looking at the S&P 100, we're seeing resilience despite these cross-currents. The index is holding near record territory, supported primarily by mega-cap tech strength, particularly Nvidia. However, breadth is narrowing, which is a concern. We're seeing consumer weakness that's being masked by a handful of large-cap names. Key support sits around the 50-day moving average, and as long as we hold above that, the trend remains intact. For the Nasdaq, we're seeing futures slip this morning on the OpenAI concerns, but the index has shown remarkable resilience. The critical level to watch is whether we can hold the recent breakout zone. A failure, they could trigger algorithmic selling and test the 200-day moving average. The Dow is actually showing relative strength because it's more diversified away from pure tech and has energy exposure that's benefiting from higher oil prices. Industrials within the Dow are mixed, with some benefiting from infrastructure spending, while others face margin pressure from input costs. The key technical point across all three indices is that we're at a juncture where either we break higher on earnings strength or we consolidate on valuation concerns and geopolitical risk. Volume has been relatively thin, which makes these levels vulnerable to headline risk.
That selectivity is going to be key for navigating this environment. Let's shift our focus to crypto, Lizzie. What are you seeing in the digital asset space heading into next week?
Bitcoin is showing cautiously bullish momentum, despite pulling back to around $76,600. The significant development is institutional accumulation continuing at a strong pace. MicroStrategy just added another 3,273 Bitcoin at roughly 78,000 each, moving closer to their 1 million BTC target. Jack Dorsey's bloc increased their treasury to nearly 9,000 Bitcoin and introduced proof of reserves for transparency, which is a positive development for corporate adoption standards. Technically, we're seeing 3 charts suggesting a potential rally toward $82,000, and there's about $1.4 billion in Bitcoin shorts, creating liquidation risk that could fuel a squeeze to 80,000. Bitcoin whale holdings hit 5-month highs, and we reclaimed the 21-week trend line for the first time since October, which signals a potential macro bullish shift. However, the rally is happening on thin volume, making it vulnerable to macro shocks from oil prices and geopolitical tensions. ETF inflows snapped a 9-day streak but still accumulated $2.1 billion recently, so institutional demand remains solid even with the pause. For next week, I'm looking at a range of 78,000 to 82,000 with key support at 76 to 77,000. The bullish case is strong based on institutional buying and technical setup, but traders need to watch macro factors closely.
And what about Ethereum and Solana? How are they positioned?
Ethereum is showing neutral to slightly bearish sentiment, which is concerning given Bitcoin's strength. ETH is struggling at the $2,400 resistance level with what looks like a triple top formation. We've got conflicting institutional signals with Bitmain acquiring a massive 101,000 ETH position despite sitting on 6.5 billion in unrealized losses, while the Ethereum Foundation continues selling pressure. Tom Lee is positioning Ethers as a wartime store of value, but the price action isn't confirming that thesis yet. The technical pattern suggests we're range-bound between $2,300 and $2,400, with a bias toward the downside if 2,300 breaks. Ethereum gained about 10% in April, but that's underperformance relative to Bitcoin. For next week, I'd be cautious on ETH until we see a clear break above 2,400 or a successful defense of 2,300. Solana is more interesting from a fundamental perspective. Developers just introduced Falcon, a post-quantum security solution with Ansa and Firedancer, which addresses a major long-term concern for the entire crypto space. Israel also approved the Bill's Shekel stablecoin after a successful Solana pilot showing real-world adoption progress. Sol is following broader market weakness but maintaining relative strength. The quantum security narrative could provide independent catalyst strength even if Bitcoin consolidates. For next week, Solana is neutral to bullish, likely to follow Bitcoin's direction, but with potential for outperformance based on these fundamental developments. The quantum security theme is becoming increasingly important across all major chains, and Solana is positioning itself as a leader in addressing this threat proactively.
Thanks, Lizzie. That's a comprehensive look at the crypto landscape. Well, that wraps up today's Morning Bell. We've covered a lot of ground from geopolitical impacts on energy and inflation to technology sector dynamics, corporate activity around SpaceX, and the evolving crypto market with its institutional adoption trends. As always, these are complex markets with multiple crosscurrents, and what works today may not work tomorrow. Remember, do your own research and consult with financial advisors before making investment decisions. If you found today's discussion valuable, please subscribe to the Morning Bell wherever you get your podcasts, and we'll see you tomorrow as we continue tracking these developing stories. I'm Robert, thanks for listening.